Good afternoon. My name is Xavier, and today I'm going to be talking to you about our webinar, Understanding Your Credit File. Before we talk about our topic for today, Understanding Your Credit File, let me talk to you a little bit about Transformance. Transformance seeks to help members of our community to find practical solutions to financial education because knowledge enables and empowers you to reach your dreams, wants, and hopes. One of the best things that you can do as you learn is seek information on your credit file, since this is our topic for today. Transformance is a non-profit organization founded in 1974, and it is a United Way service provider, as well as a HUD-approved multi-state housing, counseling, and education organization. Our mission is to empower individuals and families to achieve financial freedom. Our programs have positively impacted over 1.7 million lives over our 40-plus year history. The programs that we offer include credit and budget counseling, financial education, student loan counseling. In addition to our AIM program, our C2SAFE program, our housing counseling, as well as our debt management program. So like we said, we're a United Way partnership. Our goal is to move over 250,000 people out of poverty in the next 10 years. Now, let me tell you a little bit of a story about how our agency, our organization, helps individuals reach financial stability. Ben came to Transformance several years ago after experiencing an expensive divorce, living out of his car and paying for all of his credit expenses with credit cards. Through Transformance budgeting classes, he was able to learn how to live within a budget. Through a debt management plan, he was able to pay off all of his creditors in a reasonable and responsible fashion. After learning how to budget and clear up all his credit issues, he was able to run out several successful companies and is now a leading pillar of the community, having served at the pleasure of 2 U.S. presidents. Let's go into our topic. Like I said, our topic for today is understanding your credit reports and scores, understanding your credit file, basically. In this webinar, we will review the following topics: credit report basics, credit score facts. We're going to give you some tools to protect your score, and we're also going to give you some tools to help you save money. According to the Nerd Wallet, United States consumers owe a combined $12.3 trillion, and individual households that they owe an average of $132,000. Just to give you some idea on why understanding your credit file is such an important topic for today. Who creates the credit reports? I mean, there are 3 credit bureaus. Those are TransUnion, Experian, and Equifax. They maintain a record of your credit history. And just an information, you can get a full credit report from each one of these bureaus online for free once a year at annualcreditreport.com. On this website, once again, you can get all 3 credit reports from all 3 credit bureaus for free once a year. Like I said, they keep record of all your credit history. Just to let you know that the negative information is retained for 7 years. If you ever file for bankruptcy, that information stays for 10 years, but all the positive information that you got on your file will be retained forever. The 3 credit reporting agencies provide information on more than 1.3 billion consumer credit accounts. When we say consumer credit accounts, we're talking about their trade lines. Here we have a credit report prototype for you guys to be able to see. You can see here how the information is organized for a quick reading. Now, just to inform you, some people say that criminal records appear on your credit report. Just to let you know that that is actually not true. Criminal records or other types of records, they do not appear on your credit report. This is only and strictly for your credit report. As you can see on the top part, you're going to see the consumer information, the address, social security number, and their name. On the second section, you can see all the account summaries. This basically will tell you all your cards, all your creditors, the last day that they reported, the day where the account was open, your maximum credit, the maximum amount that they will give you. You can see the balance of what you own, what the current rating is, and if there's any delinquency history. The third section is the inquiries that you initiated. And then on the other one, you got all the other inquiries and any other public record collection items. They are at the bottom part. Like I said, like I mentioned before, the three credit bureaus are Equifax, Experian, and TransUnion. These private institutions that create the credit reports that play a critical role in our modern society. Reporting credit history to organizations that make decisions based on this history. Basically, depending on what is on your credit report, what is stated on Equifax, Experience, and TransUnion, any mortgage company, any auto loan company, any credit card company will base their decision on what is on your credit report. Again, they inform the lenders about your credit worthiness. And then in return, the lenders decide the amount of risk required that they will have to take on by taking you as a client. According to the Consumer Financial Protection Bureau, the three U.S. credit reporting agencies hold information on over 200 plus million adults and receive data from 10,000 data sources. The 10,000 agency report on over 1.3 billion credit accounts or trade lines each month. About 32 to 38 million errors are reported on credit reports. Let's concentrate now on your FICO score. You can see the how the FICO score is determined. Well, basically the FICO scores are calculated based solely on information in consumer credit reports maintained at the credit reporting agency. The risk relationship is only saying that there's an inverse relationship between credit score and credit risk. In other words, it is much riskier to lend $5,000 to a person with a FICO score of 590 than a person with a FICO score of 770. And again, multiple scores, you may encounter different scores on each one of the credit bureaus. Each individual actually has various credit scores from the FICO scoring model because, again, Equifax, Experience, and TransUnion, they have their own database of individual credit history. So more than likely, you're going to have three different numbers, but all three of them might be in the same range. Let's say that your credit score in one of them is 720. In the other two might be 715, 722, 725. They won't vary much, but highly doubtful they will be all three will gonna be the same. Now, what things impact your credit? That will be when you're gonna buy a home, a car, when you're applying for a credit card. Uh, Lenders, they just want to know the risk that they're gonna be taking on by lending you that money. The FICO scores are the credit scores used by 90% of all the lenders to determine your credit risk. And your FICO score can affect how much money a lender will lend to you and what terms. And when I say terms, I mean the interest rate. Depending on your score and what is on your report, it will depend the amount of money, not only the amount of money that they will lend you, but it will also determine the rate that you're gonna get. The better your score, the greater the chance that you get a lower interest rate. And again, good and a high FICO score can help you qualify for better rates from lenders, and they can save you money. Now, what does your FICO score consider? Basically, it considers payment history, amount owed, length of credit history, new credit, types of credit. As you can see, 65% of the consideration that goes into your FICO score is between payment history and the amount owed. This chart that you see here is a perfect guide to see how much weight each one of these category has. Basically, and what we recommend is that paying your bills on time and getting your balances, maintaining your balances low will help you improve your credit score. There's some tips for you to be able to raise your score. There are many ways you can do that based on the percentage breakdown that we talked about on the previous slide. Obviously, being on time and not extending yourself with credit are two important items. As you can see here, like I said before, pay your bills on time, get current and stay current. That will impact that 65% that we mentioned before. Work through collection accounts, keep balances low, ideally zero. Pay off debt instead of moving it around. Do not open or close accounts unnecessarily. And also, we here at Transformance can help you do all of that. Now, scoring can help you. Keeping up your score, maintaining a high score, can help you get faster loans, a fair decision making, more credits available for you, and the rates are lower. This is a quick list of items that should tell you why it's a good idea to keep your credit score in good standing. Here's a perfect example of why and how you can see why keeping a high credit score is very important. Let's say, for example, this person is going to buy a 300,000 30-year fixed rate mortgage. Let's say that person had a FICO score between 760 and the maximum of 850. That person will get a low rate of 3.096. That will make their monthly payment of $1,280, give an overall cost of $460,800 for that house, for that mortgage. And if you can see here, the lower the rate, the lower your score, the lower your score, the higher is going to be your rate, the higher is going to be the monthly payment, and the higher will be the overall cost. If you can see here, anything below 620 will falls on the subprime category. You will have an APR of 7% or more. That monthly payment went from the 1,280 to 1,996. The overall cost of the mortgage went up from 460,000 to over $700,000. Now, a little slip can cause a big fall. On this table, you can see how relatively minor indiscretions, letting a car reaching its ceiling, being late on payments, etc., can have a dramatic effect on your credit. I'm going to pause here for a minute so you can take a look at this. As you can see, if you have a score of around 680 and you're maxed out on a card, it can hurt your credit. It can be lower from 10 to 30 points. If you have a 780 score, then that might impact you, and your score can be lower from 25 to 46 points. As you can see, here's how your score is going to be impacted depending on the situation. The best way to deal with hits on your credit rating is to protect your score. Being prepared means reviewing your credit report periodically, as well as behaviors to keep your credit file in good standing. Remember that the only person that can fix your credit is you. Time is your friend, and time plus good behavior heals wounds of the past. Explain all your errors in writing and follow the dispute process. Every creditor has a timeline for you for response, and please avoid credit repair or credit fixing companies. Now here's one of the tools that we got for you, so for you to be able to save money and to avoid reducing your credit score that might impact you in having a higher rate or higher payment. One of our tools that we like to use for you to use is our Pocket Change USA app that you can download for free on iPhones and Android phones. With this application, you can plan for everything. You can learn how to save money. You can learn and play on how to do it, and you can connect with us. Once again, you can download this for free for iPhone and Android. The specific part of the app is the plan section. On this section is just basically you can keep track of everything, so you can keep track of all your expenses. You have one goal, that is to save money for a vacation next year. You can do that. You can manage that goal from your app, and that app will keep track of everything. Like I said, the app is considered the Fitbit of personal financial accountabilities. The app sends you a message on how you're doing, so you can keep track of your goal to see if you need to do something to rearrange some stuff in order to achieve your goal. If you need to arrange and you need to change your priorities, this part of the app will help you. It will send you emails giving you feedbacks and letting you know when you reach different milestones along your process. Well, thank you very much for being here. That will be all for today. My name is Xavier. It's been a pleasure to being here with you. If you have If you want any more information regarding this webinar or upcoming webinars, I encourage you to visit our website at transformingsusa.org, or you can call us at 1-800-249-2227. Once again, you can go online, transformingsusa.org, or you can call us at 1-800-249-2227.